Hello guys, welcome back to the Brutal Mustard channel. I hope you guys are having a fantastic day today. In this episode, we're going to talk about a crypto that has been added to the Coinbase's roadmap, and this project is called Ooki protocol or the Ooki token, right? Again, as always guys, I highly recommend you guys to do your own research on any of the projects we cover on our channel. And for this project, I recommend you guys to go to the website hello.ooki.com in order to learn more about this project, right? And if you pay close attention to this video, I'll also tell you guys a trick that I used when it comes to tokens that will be listed on Coinbase, which you can use to benefit to make some really good short-term quick gains. And you can do this repeatedly regardless of which token it is, and you need to watch this video till the end in order to find out, right? But before we talk about that, I want to talk to you guys about Itrust Capital. Itrust Capital, if you are a resident or citizen of the United States, then it's the best platform for you to invest in your crypto using your IRAs, right? So you can basically use Itrust Capital's platform to buy and sell crypto 24/7 in your tax advantaged IRAs. So if you go to their website itrustcapital.com and search for some of their information, including pricing information, you can first of all find out that they have an incredibly transparent pricing mechanisms in place, which basically includes a monthly fee-free account, which is pretty crazy. And they have some of the lowest transaction fees in the crypto space, which includes 1% cryptocurrency transaction fee, as well as apart from crypto, you can also trade gold and silver as well. And they have $50 over spot per ounce for gold and $2.50 over spot per ounce for silver, right? So these are some of the lowest in the market right now, and you can basically take advantage of that, right? So when you start an Itrust Capital account, what do you basically get? You basically get an IRA, a new IRA account, as well as they help you to facilitate fund transfer as well as roll over and contribute your IRA. And they provide you with all necessary IRS and tax reporting services. They also provide you with unlimited storage with institutional custody partners, and they also provide you with the platform support and maintenance, and all of this is given to you without any additional or hidden account fees, right? So those are pretty cool features if you ask me. If you scroll further below, they have their own video that I highly recommend you guys to watch if you are trying to use Itrust Capital account, and you can also understand the pricing and fee from their video as well. And if you scroll further below, they also provide you with instructions on how you can do in-kind transfers to your account, right? So if you scroll further below, you will find their FAQ section, which talks about other information that you may have questions about, which they'll provide you clear answers, right? So if you use the link in the description to set up your Itrust Capital account and fund it with a minimum of $1,000, you get a $10 welcome bonus, which is pretty crazy if you ask me, because not only do you get a welcome bonus, but you also get all the benefits that we discussed right now. And by also using the link in the description to setting up your Itrust Capital account, you're also supporting the Brutal Mustard channel, for which I thank in advance. So going back to the Ooki token, for the purpose of this video, I'm going to rely on the information presented on CoinMarketCap's page for this token, but this is only going to be a peripheral analysis, which means you need to do your own in-depth research before you put your hard-earned money on this token, right? So what is Ooki? Ooki is a powerful and fully decentralized margin trading, borrowing and lending platform with a ton of features. So again, basically what Ooki is, it's a platform on the Ethereum blockchain, and they are a fully decentralized margin trading, borrowing as well as lending platform with a whole lot of features that you can't really find anywhere else, right? So that's basically what Ooki is. Ooki is a protocol for margin trading, borrowing, lending and staking. Ooki allows anyone to build applications that enables lenders, borrowers and traders to interact with the most flexible decentralized finance protocol on multiple blockchains. So not only is this blockchain protocol blockchain agnostic, but at the same time it provides you as well as the developers and users multiple layers of flexibility, which you can't really find with other products, right? So Ooki is a fully decentralized community run project governed by the community vote for all major changes to the protocol. So one thing that you need to note is that you're seeing a pattern based on the videos that we covered so far. We've been basically covering a lot of coins that basically provides you with information about coins that are listed on Coinbase or going to be potentially listed on Coinbase. Ooki is going to be a coin that will be eventually listed on Coinbase pretty soon because they have added it to their roadmap. You can clearly see that Coinbase is focusing on tokens that are governed by the community, which means they're focusing on tokens that have a fair launch, that don't have any form of centralized control by a particular group of individuals, which includes the developers or the creators of the token itself, as well as tokens that are not unfairly distributed, which could cause pumps and dumps, right? So this is something that you can actually note and take note of, because you will find a lot of community governed tokens which are fully controlled by the community, and if they are not already listed on Coinbase, you can bet that they will eventually be added to the Coinbase's roadmap, and that will be a crucial information that will help you to invest in those tokens to make a significant amount of money, right? So this is one of the strategies that I used, and another strategy that I'm going to tell you, you need to watch till the end of the video, right, to find out. So obviously this is a fully community governed token which has a lot of decentralization. It's fully decentralized because it's on the Ethereum blockchain, and not just on the Ethereum blockchain, it's also available on multiple different chains as well, and they basically allow the community to decide the fate of the protocol itself, right? So just like any token, this protocol also has its own token called the Ooki token, which is the token of interest in this video. The Ooki token is a governance token that allows the Ooki community to govern the protocol through staking Ooki token and voting on the Ooki DAO. So the token can be staked just like any other staking token, and once you stake it, you have voting power, right? So you can basically vote on the Ooki DAO just by holding the token and staking it, right? So the Ooki ecosystem is designed to emphasize community control over the protocol through governance, fee sharing, and voting. So obviously they are emphasizing the fact that you can basically take full control of the protocol as a community based on governance. They focus on fee sharing, which is very important, and at the same time voting as well. So all of the more community driven concepts are being undertaken by Ooki, which is a great thing, right? Innovation: Ooki protocol is a fully decentralized trustless protocol enabling users to margin trade long or short with leverage, borrow, and lend. So obviously they are innovating in this space. Obviously there's a lot of margin trading protocols out there, but what they do differently is that they are a fully decentralized and trustless protocol. There's a lot of semi-centralized protocols that offer the service, so it's a bit risky because the protocol can easily shut down, or there could be a rug pull. But Ooki is fully community governed, and therefore you can definitely expect Ooki to be one of the most trustworthy decentralized margin trading protocols in the crypto space, right? So that's an innovation that they're offering. Trading is at the core of Ooki protocol. Users can easily open long or short leverage trading positions at fixed interest rate, borrowing rates. So basically they allow you to trade by longing or shorting using leverage trading, and you can basically do that through the fixed interest borrowing rates, right? So borrowing and lending, which is the most common feature that's used by everyone. Ooki protocol allows users to borrow funds with collateral and also lend out funds and earn interest. So if you're trying to provide collateral and borrow another cryptocurrency, you can do that with Ooki, similar to Aave as well as Compound Finance. If you also want to lend out your tokens to earn some interest, you can do just that as well, right? A unique feature of Ooki protocol is the existence of dynamic interest rates to ensure borrowers and lenders receive optimal rates when opening new positions on Ooki. So you can basically expect to get dynamic interest rates, which is kind of pretty common on all decentralized borrowing and lending platforms. You don't really get a fixed rate, but it's good because depending on the demand for a particular token, the interest fluctuates, and obviously you have the best interest rate that you could get possible from Ooki, but at the same time you have fluctuating interest rates, right? This dynamic rate engine targets an 80% utilization rate and will keep pools optimally utilized. So obviously their primary goal is to have pools that are utilized at 80% maximum, and this basically will be a good opportunity for the pool to distribute its tokens equally and at the same time optimally and in an efficient manner, right? So that's the main focus. Staking. Ooki token holders can stake Ooki tokens and receive a portion of the protocol revenue. So obviously if you're a Ooki token holder, you are incentivized to stake your tokens to earn staking rewards while also getting the governance aspect to it, because if you stake your tokens, you get voting rights which you can use to participate in the governance of the protocol, right? 50% of fees generated by the protocol are distributed to Ooki stakers. Obviously, you are incentivized, so therefore the money must come from somewhere. So any fees that is accumulated, 50% of that fee goes to Ooki stakers, right? The remaining 50% fees are allocated to the insurance fund and Ooki treasury. So it's really important to know that this is a platform that has insurance fund, okay, built into it, which means obviously there's a lot of hacks and liquidity drains that's happening in platforms due to volatility in the crypto market. A lot of centralized lending platforms have pretty much been insolvent, and a lot will become insolvent as the market becomes more volatile in the downward direction. Decentralized lending is the way to go, but even in decentralized lending, there's a lot of platforms that have gone bankrupt, or there's no sufficient liquidity for people to withdraw their tokens. So how does Ooki prevent this from happening? What Ooki does is basically the remaining 50% after providing the initial 50% to Ooki stakers, the remaining 50% basically gets allocated for insurance fund, which is built into Ooki. So if something does bad happen, obviously things can happen bad all the time, but if something does bad happen, then Ooki will basically use the insurance fund to repay their lenders. So that's the main advantage of using Ooki protocol, right? As well as they also have a portion of the 50% going to Ooki treasury, which will help in future developments for the protocol itself. So it's very interesting that they have a insurance fund already built in, which is something that a lot of protocols will eventually adapt from Ooki, right? Ooki protocol currently supports 4 blockchains: Ethereum, Polygon, Binance Smart Chain, which is the BNB chain, and Arbitrum. So currently they have 4 blockchains. They're multi-chain already, and they're constantly expanding to multiple other chains as well. New blockchains will be added regularly following community consensus. Obviously, if you are a Ooki token holder, I encourage you to participate in the governance mechanism, where they can basically add new blockchains for voting, which you can also participate to have a say on which other blockchains Ooki should branch out to, right? Insurance fund, this is the most important part. Ooki's insurance fund is used to cover any unexpected losses caused by hacks. Additionally, Ooki has a $1 million in coverage through Tidal Insurance. So obviously there is a built-in insurance mechanism that I mentioned to you guys, right? So there are actually another insurance mechanism that's on top of the existing insurance mechanism, which is provided by Tidal Insurance, right? So the first built-in Ooki insurance covers for any unexpected losses caused by hacks. So hacks are a pretty common theme in the crypto space. So if you are worried about platforms getting hacked, which you should be, you don't have to do that for Ooki protocol, because they have a built-in insurance mechanism in place where a portion of your funds when it comes to transaction fees goes to the insurance fund to accumulate for a potential hack that may happen in the future. It's a very secure protocol, but no protocol is secure for very long, because there are new hackers and new types of technologies that hackers use in order to hack borrowing and lending platforms like Ooki, right? So in order to protect themselves from that, they have a built-in insurance fund which covers any losses by hacks. And on top of that, Ooki also has a $1 million in coverage through Tidal Insurance. So Tidal Insurance is an additional insurance that they basically use to cover for any other losses of up to $1 million. So this is pretty crazy. Again, $1 million is not a huge amount, but it's still good to know that they have 2 insurance coverages than just 1 insurance coverage, right? It's pretty cool. How is Ooki protocol governed? So you can basically read through this section. This is fully going into the DAOs section as well as governance. Basically, token holders have the right to vote, they need to stake, and they get governance voting rights based on how many tokens they stake. And the more tokens you stake, the more voting rights you have, and it's a fully community driven experience, right? So what is the next step? So they are trying to focus on permissionless listing, decentralized limit orders, as well as B protocol leverage position. So these are all specialized tools that will help a lot of users in doing a lot of cool things on Ooki protocol on top of what they're already available to do, right? So those are all the next steps for Ooki protocol. So that's pretty much the quick overview of Ooki protocol. Let's go to the website itself, which is hello.ooki.com. if you go to the website, you can clearly see that they have a very simple and elegant website. You can click use Ooki at the top right corner to access their app itself, which we'll go through in a few seconds. But if you go to their website, they basically state that this is your gateway to DeFi. Trade, borrow, lend, and stake. They have a total value locked of $22.4 million. Obviously, it's not much, but it's growing on a rapid rate. And that's one of the reasons why Coinbase is also choosing to list this token pretty soon, right? So this is a cute object that is basically chasing after a cookie. It's just their mascot. Trade, borrow, lend, and stake. If you scroll further below, you can trade. You don't need a KYC. So KYC is becoming a mandatory requirement for several jurisdictions around the world. If you are trying to trade on a platform, you are more likely going to be requested to provide an KYC, right? But here, since it's decentralized, you don't have to provide KYC. It's non-custodial, which means you have control of your private keys, which is always good, especially in situations where you're trying to lend your tokens. And you've already seen Voyager, Celsius Network, and several other centralized lenders are going down. So it's important that you have access to your own private keys, right? Minimum liquidation penalties, which is also pretty good to know. Indefinite term positions. So that's again a very important feature because a lot of people want to have indefinite term positions just to get the maximum value from their protocol, right? So you can basically leverage trading, perform leverage trading of up to 5x, which is pretty crazy. You can see this is their layout on how their protocol looks like. Ooki trade, you can buy or long or sell or short. You can do the trading right now if you want by clicking on the button. Borrow crypto. So again, they have multiple products. We just went through the margin trading product. The next one is the borrowing product they have. You can basically get variable interest rates for borrowing. You can earn Ooki token by borrowing, which is very important to know because you are basically incentivized to borrow and lend through Ooki tokens. So Ooki tokens is provided to people who borrow, so you can do that. No KYC or credit checks, again pretty straightforward, and partial liquidation. So you have to keep in mind that if your loan to value ratio is below a specific threshold or at an unhealthy level, then you may get liquidation, but it's only partial, not full. Okay. If you scroll further below, you can see the APRs. You can borrow ETH at 4.20%, DAI at 9.20%, and so on and so forth. You can clearly see a lot of tokens. They have a decent amount of major tokens from the Ethereum blockchain, and you can see the rates, which are pretty cool compared to several other platforms as well, right? Lending crypto, this is the most important section. A lot of people want to earn passive income with their cryptocurrency now that the market is moving sideways. So you might want to park your token somewhere where you can earn really good lending interest rates. So if you see, Ooki is the best place to do that as well. So deposit and start earning immediately, no lockups, withdraw anytime. Pretty straightforward. Look at the interest rates, right? So these may seem to be extremely high, but if you see, they are all fully backed and are basically managed by the smart contract to enable 80% utilization of all the pools, right? So USDT currently is 15.74%. You will never get this kind of rate from any bank. USDC, if you see, is 0%. So it seems like people are borrowing a lot of USDC. So you currently can't really earn any interest from USDC, but you can definitely earn interest from USDT. All you can do is just convert your USDC to USDT, and then when the interest rate of USDT goes down, you can convert it back to USDC. So since they are stable coins, you have that advantage, right? DAI, the same thing as well. ETH, you have a low interest rate of 0.02%. Uni and WAP BTC, you basically have no interest rate because it depends on utilization, but it doesn't mean that you have to panic and take your coins out there. You can basically leave them there, and then interest rates fluctuates on a daily basis depending on utilization, and eventually you will start earning some interest when they have some value, right? You can also use the calculator to see how much you can earn on a monthly basis or on a yearly basis, right? So compare versus traditional finance. This is very interesting that they're doing that because not a lot of protocols do that. So Ooki lending with Ooki basically provides you with $131 for every, I think, $10,000 that you invest in it. Since USDT is kind of like at the highest APR right now, you earn $131.20 per year at a 15.74% interest rate with Ooki. If you compare any other traditional banks, you only earn a maximum of 2.20%, which is from TD Bank, and everyone else is less than even 1%, which is pretty crazy, right? So if you scroll below, staking crypto, this is another important thing that you can do with Ooki. use Ooki, earn Ooki tokens. So not only will you get incentivized to earn Ooki tokens by borrowing crypto, you also get incentivized to stake your tokens, Ooki tokens, by getting more Ooki tokens, right? You basically can not only stake and earn more tokens, you also have voting rights as well, right? So how much can I earn staking rewards depends on protocol revenue, and the more Ooki grows, the more you earn. Again, pretty straightforward. And Ooki is growing rapidly, which is benefiting a lot of early stakers, right? Ooki ecosystem is multi-chain, it's a DAO, and you can learn more about it, as well as they have NFTs as well coming up, which is pretty cool, right? So Ethereum, BNB chain, Polygon, and as well as Arbitrum, which is not mentioned here. This is another cute cartoon character here. You can subscribe to the newsletter to stay in touch and get most up-to-date information directly from their platform, right? And if you scroll further below, you can contact them for more information, and you can access the social media information as well, right? So I'll just quickly go through the Ooki protocol itself. If you click on use Ooki on the top right corner, it basically takes you to their page, which is pretty simple and elegant. You can see obviously they have multiple rates. So USDC on Optimism is 19.9%. So if you don't really find a good rate for USDC in one blockchain, you can just move it to a different blockchain where you can earn more interest, right? If you scroll further below, they have multiple other chains. Again, I forgot to mention that they're also available on Optimism. As you can already see, they are already expanding to multiple other chains. If you scroll further below, you have the trade, lend, and borrow tabs at the bottom, and then at the top you have pretty much all the tabs that you would need to understand. It's pretty straightforward and easy and user-friendly to use, right? So now that we covered about Ooki, let's go to the CoinMarketCap page for this token. This token is currently ranked, 575th by market cap on CoinMarketCap, and is currently trading at less than 1 cent per token. But if you see, the token is trading at $0.007 per token, with a 30% increase in the past 24 hours. So it seems like people are already trying to buy this token in anticipation of Coinbase's listing, right? This is what I'm talking about. So this is the strategy that you should keep in mind. You should basically buy the rumor and sell the news. So this is a strategy that you can use for any crypto and keep making a lot of money. That is basically, once you basically identified a particular token that has good governance and it has equal and fair distribution, you can easily follow through on that project by waiting for that Coinbase announcement that they will make about listing a particular token. And once the Coinbase announcement has happened about either they are adding this token for a particular roadmap of theirs, or even trying to list a token sometime in the future, that should be the trigger point for you to focus on buying this token, right? So clearly a lot of people are taking advantage of that technique to make some really good short-term gains, because once you buy the token after the Coinbase announcement, then you just need to wait, or you can use Ooki to stake it to earn additional Ooki tokens till the Coinbase announcement of the actual listing date, right? And on the listing date, you can dump the token to make some really good profit, right? So this is the strategy that I was talking about that will consistently make you a lot of money if you do it right. Obviously, again, this is not financial advice, but you can easily take advantage of this both in a bear market as well as in a bull market, right? If you see, this is the Ethereum contract address for this token here on the top of corner. And if you easily see, the market cap is only $26.3 million, right? So this is still a very small cap crypto gem. In my opinion, I think this is a really good gem because they have a lot of powerful products on their platform, and at the same time the token is definitely going to get a Coinbase listing, so there's no doubt about it. And another thing is that after Coinbase listing, the token tends to go down. So once you sell this token on the day of the Coinbase listing, you can basically buy it back on the very next day or within 24 to 48 hours period to buy it back at a lower price point and hodl it till another exchange lists this token, right? Usually if Coinbase lists a token, Binance follows, or if Binance has listed a token, then Coinbase will follow, or vice versa. So you can do the same thing for multiple other exchange listings and make some really quick short-term gains, right? But you need to be very careful. This does sometimes not tend to work, but most of the time it works. You just need to be very careful, right? The token's max supply is 10.5 billion tokens, which is a huge supply. Obviously, that's one big red flag for this project because the tokenomics is quite bad, but at the same time the protocol itself has a lot to offer, right? If you take a look at the circulating supply, the circulating supply is 32% of the max supply, which is relatively not bad, but at the same time it's still not that good, which means you'll still expect to see some short to mid-term price lumping for this token. So that's something that you need to pay attention to, because the max supply will eventually become circulating supply, and as that happens, a lot of tokens will be dumped into the market, which will push the price of this token down, right? So basically, pay attention to that. That's the only negative point for Ooki. When it comes to the charts, again, this is what I'm talking about. If you see, the token has pretty much been moving sideways for quite some time right now, and with the Coinbase adding this token as a part of their roadmap, that literally has started a small peak here. I hope you can see this at the bottom right corner of my screen. It's literally going sideways, and then there's this random peak here for no reason, and then it had this small peak because of the Coinbase announcement listing. So during the Coinbase listing, which will happen pretty soon, the coin will go a little bit more higher, maybe at around maybe 1 to 1.1 cent per token. That will be a really good short-term gain, but you can easily sell that to make some good gain, right? When it comes to the price action of this token itself, you can clearly see that this token had performed pretty well in the past. At least if you see, the token was at around 2 cents per token, but then it reached an all-time high of 5.5 cents per token. This was as of 24th of December 2021, and then the token started crashing violently, reaching an initial all-time low of 1 cent per token as of 23rd of January, and then it made some really short-term peaks, and then dumps, and then peaks again and dump, and then since May of 2022, the token has continued to dump, reaching an all-time low of about $0.003 per token, which was as of 13th of May 2022, and then moved sideways for a whole bunch of time, and now it's starting to go upwards because of the Coinbase announcement that was happening today, right? So this is the main way people make money with crypto. Crypto is still very volatile. Crypto is very new. Therefore, there's a lot of new exchanges, especially major exchanges such as Coinbase and Binance, that have the potential to pump the token price just by announcing a listing announcement, or just by announcing the fact that they're adding it to their roadmaps or to their potential listing criteria. That hypes up people and they start buying the token, right? So even though the token is up 30% in the past 24 hours, I personally will definitely buy this token, because this token has a lot of things going on, and once the Coinbase listing has actually been announced, I'll wait, because the token will continue to do up, and at the same time, on the day of the Coinbase listing, I will dump this token. I will definitely make some really good short-term gains, but what I do with that gain is that I will hold on to it, and I can easily see after the Coinbase's listing happens, the token starts going down, right? And I buy back at the bottom, and then I wait for another major exchange to list this token. But before that, I need to make sure that there are no other major exchange listings for this token, right? For that, I go to the market tab, and I can easily see that unfortunately for this token, a Binance listing has already happened. So Binance has already listed this token, which means you cannot make any beneficial moves, and therefore I will easily dump the token on the Coinbase listing date, and then I will just move on to a new token, right? If Binance had not already listed this token, I will then buy back the token after the Coinbase dump, and then I'll hold on to it to a Binance exchange listing, which will happen because the token is a fair launch token. There's no reason for them to not list it. And Binance, even though recently they've been quite slow in listing a token, they do eventually list a token, which will pump the price of the token again, making the same gain that I made through the Coinbase listing, right? So that's my strategy, and that's the trick that I want to tell you guys. This works for any token and every token. I'm gonna make sure that I provide a little bit of strategy moving forward on every video that I make, so that you guys can benefit as well, right? So if you see Binance, Get.io, KuCoin, and Femex have all listed this token. You can also buy this token from SushiSwap as well as several other decentralized exchanges on Polygon as well. But I think Binance and Get.io, KuCoin should be the major exchanges that you should be going to. And once Coinbase listing has happened, you can buy this token from there as well, right? So what's my final verdict on this token, guys? I think this token has some really strong fundamentals. The tokenomics is horrendous, so you cannot expect this token to perform extremely well until all the tokens supply has been dumped into the market, right? So that you can actually get a fair market value for this token. Now only 32% of the tokens are in circulation, which explains the sticker price. And the benefit of this token is that since the sticker price is low, a lot of newcomers will blindly buy this token without understanding the relation between the sticker price as well as the market cap, which is going to be beneficial for you as a short-term investor, because you can dump your token on the day the Coinbase listing happens, thereby making quick bucks from inexperienced traders, right? That's the only way you can consistently buy low and sell high before you basically see a Coinbase listing or a Binance listing, and then rinse and repeat for any token, and you'll pretty much make a really good income regardless of whether it's a bear market or the bull market, right? For this token, I can easily predict this token to reach as high as 1.1 cent per token immediately after the Coinbase listing, and then it will dump after the Coinbase listing has happened to a price of maybe $0.005 per token, which is the best time to buy this token if you want to buy it later on. But I would suggest you to just move on, because I don't think this token will perform really well in the short to mid term because of the tokenomics based price lumping, right? Again, this is just my opinion, guys, not financial advice. Please do your own research before you put your hard-earned money on this token, right? Again, remember, guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please hit the like button and subscribe for more videos. See you in my next video. Bye.